Job numbers, stubborn inflation, and elevated interest rates, many Americans are hitting the brakes on major financial decisions. Now that economic uncertainty is spilling over into the housing market. But as Michael Yoshida reports, it's not all bad news for potential home buyers.
Redfin says July's numbers for canceled home buys was the highest on record for the month dating back to 2017, with high home buying costs as well as a shaky economy causing buyers to be skittish.
Roughly 58,000 U.S. home purchase agreements were canceled in July, according to a Redfin analysis of pending sales data.
Part of that has to do with volatility in interest rates and home buyers just getting cold feet about how much they're paying.
Redfin's Daryl Fairweather says one of those sticker shocks for would-be buyers: rising insurance costs.
You often don't know how much you're going to be paying in insurance until after your offer is accepted. So that can be a bit of a shock if you get this big insurance payment, or maybe you can't find insurance at all. That can definitely cause a deal to fall through.
Another thing that could be at play: the balance of power in the housing market shifting towards buyers. With more homes to choose from compared to just a few years ago, people looking for a new house may not feel in a rush. And if during the inspection period they discover an issue they don't want to fix, or if a better home comes up for sale, then they could feel more comfortable backing out of the deal.
This is not good news for sellers, because if a deal falls through and they have to put the home back on the market, it's kind of like a scarlet letter, because future buyers think that there might be something potentially wrong with the home.
Fairweather says a shaky jobs market and economy is also causing some to hold off on a new long-term financial commitment, choosing to stay in their current house or even move to a rental until there's more economic certainty and stability.
And the lock-in effect, those people who are unwilling or unable to move because they don't want to lose that current lower mortgage rate for a higher one, that remains an issue for the real estate market as well. But Fairweather says that potentially this fall, if the Fed does end up lowering interest rates, that could change and potentially lead to a busier buying and selling season. In Washington, I'm Michael Yoshida.